Oil prices climbing again today. Hopes for a quick deal in Iran seem to be fading, and the Strait of Hormuz still under threat. That's the story for the oil market, at least. And you got some traders now back to bracing for the possibility of a longer energy crisis. Doug Flynn on this. Flynn Zito Capital Management. I think WTI is like 91 and change. Brent crude, which is the global benchmark, is still over 100, 103. So we're back up. As I said, one day does not make a market, and yesterday was one way, now it's the other way. We haven't gone all the way back up, but what would you say about oil?
Yeah, yesterday was sort of the peace headline trade, and so you saw that it drop a lot on the oil prices, and the market rallied on that, and now it's pricing in back the possibility that peace may have been oversold a bit. And so, basically, as long as the Strait of Hormuz is in the conversation, I think $100 oil is in the conversation, and that's where we are.
Yeah, and the possibility, see Brent, that's the global benchmark again. A $4 gas, we're right around that mark or just below it. And then you say, what about these airlines? What should people know? I mean, they got enough problems with the lines at the airports, but like, for example, United Airlines is now warning of a 20% fare hike if jet fuel prices remain elevated, if they continue to surge. So the story on airlines for years is that they usually hedge their costs, right?
That's right.
When they buy their gas. I see you're laughing. So that, did they not hear, or are they going to raise prices even though they did? I mean, what should people know when they see that?
So typically, yeah, an airline and your oil company, all these companies will hedge those wild price swings, but they typically only do it to a certain percentage. Now, if oil prices are up effectively about 50% since before all of this, if they do raise prices 20%, I mean, a major part of their cost is the fuel, so it's a good part of it, and they probably have hedged a certain amount to a certain degree. But it's usually only for so long and only a certain percentage. They probably aren't going to pay for all of the hedging that it would take to do this crazy 50 to 100% rise. That probably wasn't out there in their outlook to do it. So at some point, all of that rolls off, and then you have to start paying more of the spot prices, no matter how much you may negotiate or plan ahead. And I think they do an overall pretty good job, but you just can't cover every possibility to every percentage degree. And I think eventually, if it stays up here, this is what we're talking about, duration we've spoken about. If it keeps up, they'll have no choice but to, at some point, pass this down. No question.
Well, that's what I was thinking about when you were talking, was duration, that word that keeps coming back, because, I'm trying to think exactly, but it was probably 2 weeks ago we said, oh, in 2 weeks, and now it's 2 weeks later. So it's getting close to the point. And when is that break point? I mean, it's hard to put an exact date on it, but IEA flooding the market with oil bought some sort of time. There are other, and the Energy Secretary, I thought, made an interesting comment, Chris Wright. He says there are a few more levers that could be pulled to try to lower prices. I'm not sure what those are. Do you know what else they could do to try to buy more time?
Not particularly. I mean, again, they've taken, they take an area that has 20% of the oil supply, and you've put certain percentage of it elsewhere. Some of this is on the speculation that it's going to keep going because, still 80% of the oil is or more is getting where it needs to get to. So, and certainly over here, it's not affecting us directly, but the prices are so high. So they want to keep the prices down. All the dire numbers that you see with, what hit it's going to take on inflation and GDP, they all, when you look at them, they estimate that these prices are going to be here for a year. So, that may or may not be the case. And if it's not, then all those dire predictions are not going to come true. But until then, it's the uncertainty in all markets, whether it's oil or the stock market. They just don't like the uncertainty and the unknown there, and that's what you're playing in right now. So they may have some levers. I don't know exactly what they would be, and maybe they help a little, but it's not going to take this off until we get everything back online and back to some semblance of normalcy, whenever that may be.
Yeah, because I thought they pulled most of them. I mean, the Russian oil, even the Iranian oil, taking sanctions off that, which a bunch of people criticized, but they claimed that was necessary. The argument Bessent made was that they're using their own oil against them. I don't know about that, but we'll talk about that later in the show. Thank you, Doug.